Hello, I'm Liz Lumley, and this is Finextra at Sibos, and we've gathered together some of the top thought leaders in global transaction banking and trade finance to talk about some of the trends that are affecting our industry right at the moment. And Finextra, along with Misys, have also put out our annual Global Trends in Transaction Banking survey, which is available at the show currently. So, I wanted to start off, and I'm going to start off with you, Christian, on this story. We've seen from previous surveys that a lot of banks have joined up their businesses for cash management and trade and payments, and this is reflected again with the results of this year's survey. So, but now that banks seem to have moved on from this consolidation phase, how are they extending these services in a single unified offering for corporate clients?
At Société Générale, for example, we have created a community of global transaction banking, unifying all the business lines all over the world. And this community is animated by a central point in Paris, and getting clear that all the business lines are working together in order to service our corporate clients. This is the way on which we can unify our various business lines.
So, maybe moving on to you, what type of new product offerings and services are we seeing, within the corporate front end?
Well, basically, the products itself are as old as they can be honest. The very traditional basic products, but what you see is a more holistic way of looking at them. It's very easy to group your products together under the brand of transaction service or global transaction banking. But to prevent from falling in the old trap of sequential product sales and looking at a more holistic working capital solution for your corporate customers, we have, for instance, at ING installed a transaction service solutions group where your key product domains come together, but actually looking into the working capital management of your clientele a bit more carefully, and making sure that you have a true joint offering. Also if I look at the infrastructure, in the past products were by and large sold using their own individual product channels. I think generally speaking banks are getting much more sophisticated in offering more general portals and overall solutions to our corporate customers.
Mm-hmm. Did you want to Carlos join in on that? What are you seeing from your clients in this end?
Well, we do, as Misys is working closely with our clients, we do see trends around the payments energizing and bringing all together because the synergy between the products, maximizing their supply chain. It is really about bringing together the cash, payments, FX in a single unified platform so that for the corporates to be able to take advantage of the whole structure behind in the banking space. That's really what we see moving forward.
So Barclays and Citi, you guys handle EMEA. Are you seeing similar trends?
Well, I would say that the economic crisis in Europe has forced a lot of European companies to come to this part of the world and to some new markets. That's forcing all the banking industry to build those products in those countries where historically were being available for the European corporates. For instance, all this receivables finance, supply chain finance, that was very well established in Europe and was, the legal environment was appropriate, and we built. There is a historical background over there, and because our aim to follow the flow of our corporates coming to this part of the world, we are, as an industry, we are building these capabilities in this part of the region, which is good, by the way, not only for our European corporates, but also for the local corporates that will be benefiting from that build up.
Mm-hmm.
Yeah, very, very similar, Hughes. So one of the things that we've noticed is that corporates are going through a change as well. Corporates in the erstwhile regime, you would probably talk to a treasurer and he had a certain responsibility. Now that's extending in the corporate as well. They become more inclusive as far as working capital finance overall is concerned. So taking a cue from that, as rightly mentioned, we're seeing a lot of our corporates as they expand globally and in their widened role as treasurers, we would want to be able to service them with one-stop solutions as far as systems are concerned. The other trend that we are seeing is that it's not just corporates, it's even banks worldwide who want to be in that panel. They want to be able to service their own clients. So we see a lot of opportunities and partnerships between banks in the aggregator model going forward, where one bank helps the other to be able to service its clients.
So I wanted to move on to regional offerings. Business opportunities in Europe and Asia Pacific figured very high in the survey. So I don't know who wants to jump in on this first, but what are some of the trends we're seeing in regional services in global transaction banking?
Well, since you look at me, I'll
Yes.
take this one. Well, I think generally financial institutions are each making their own choice as to what they want to be. You have a number of true global players, but there are few of them. If I look at ING, we've taken a conscious decision to be primarily a European-focused bank. That doesn't mean that you do, for instance, international trade beyond Europe, but we're focusing on Europe, Western Europe, Central Eastern Europe, and therefore in the trade space on flows into or from Europe and intra-Europe. And when we're looking at cash management solutions, we want to provide a pan-European solution, but we don't have the aspiration to have a global offering in that respect. So I would say I see more and more banks either consciously deciding to go global, but very few, or become true strong regional players.
I agree with. I think each bank has a strong footprint geographically, and each strategy is based on this geography or network strengths. For example, for Société Générale, we are very deeply involved in Africa, for example, and on this we are starting to develop the trade finance between Africa and Europe, but also from Africa to the Chinese banks. So it's some corridor that we are inventing now. So it's.
Yeah. I mean, you mentioned Africa. I was surprised in the survey that Africa didn't figure higher in Latin America. It seemed the Europe and APAC was a bit of a conservative outlook. I mean, do you agree, or do you think they're?
I do agree, and for us as a software supplier to our clients like Barclays, for example, we do see initiatives like the SADC in Africa. It's really empowering that region in order to move the payments to be much more efficient. So bringing the SADC initiative, and this is just the first one, because we've seen in the past, we see Africa being modernized, so they are getting the infrastructure, and now they are starting to roll out the products. And SADC is just, as I said, the first one that for sure will help the banks or the institutions to start rolling out and making the processing of payments much more efficient. And when we will help to streamline and to efficient the whole payment initiatives, that at the same time will help liquidity. Because when we look for the corporates today, what they look for is to have easier access to liquidity, which then brings us to supply chain finance. It's all around, it just rolls around.
Yeah, so that moves on, because I really wanted to move into trade and supply chain finance. So, the trade and supply chain finance were seen as a priority for banks in the survey. And, this year over half of bankers said that streamlining their trade finance business was a key priority. So what are some of the new opportunities to grow trade finance and supply chain, and what are you seeing the most demand for? So I'll go to you first.
If may I, add a comment on this part before I jump into it. This is not only, a bank priority, it's also a corporate priority. I think that, there is a clear change in the trend. The corporates are looking for supply chain or for receivables finance for all the open account, products, not only because they want to raise liquidity, not only because they want to manage their risk, their customers' risk profile, but also, and this is something really interesting, they want to predict their treasury capabilities. So when you look at some of the debtors that they are asking us to discount or to advance payment on them, they are very good quality, and they are not, the corporate is not asking us to discount this, invoices or these receivables on that certain, buyer, because they want to get rid of the risk. They want predictability. They want exactly to know what is the day that their current account will be, credited with that amount. Interesting to mention is that supply chain has historically been very European driven also, and the demand was there. I think that there is some markets, especially in Southern Europe, that are very advanced. You have Spain, you have Portugal with this confirming, which is the the local name of supply chain. Interesting wise now is that a lot of European customers are asking for these solutions in countries where historically they were not available. And it's top priority for banks to build it up, to follow the flow of their customers. But I would say clearly that it's in the top of the agenda of all the treasurers.
Yeah, I mean, to agree, Semi, what are some of the challenges with this?
So we believe that the three biggest trends which are going to dominate the next 10-15 years are globalization, urbanization, and digitization. So, as mentioned, from a globalization point of view, our corporates are looking at globalized fields. They buy globally, they sell globally, nobody talks about domestic trade. And that's reality. I mean, we did a survey among the supply chain sort of opportunities in the market, and we saw that probably of all banks put together, the penetration in the market is probably less than 1%. So, when you look at our corporates and look at what they're trying to do in supply chain finance, the opportunity is huge, as they go global and start sourcing globally. So, as rightly mentioned, I think liquidity is going to be a key concern. Geopolitical risk is going to play to it because you don't want your suppliers to be caught up in geopolitical risk either. So, supply chain finance has a very, very promising future as far as we are concerned as well. I guess challenges would be that to some extent regulation. So, one of the thoughts that's coming up is that regulators in various jurisdictions want assets and liabilities to be booked in the same jurisdiction. And one of the fundamental principles for most global banks erstwhile was that you could move your money around. You could take it from a surplus jurisdiction and put it into a deficit jurisdiction and fund people, and that's why lower the cost. But now if there was to be a plea that you have to only use the assets and the liabilities in the same market, it sort of creates a challenge because you then can't move money around. The other is going to be laws like data privacy and confidentiality. So again, because people are looking at lowering their costs, they're looking at getting into the cheapest location from a servicing point of view. When data protection stops at the border, when data becomes non-border, you can't take it across, that creates an issue because you then can't create a sort of global solution. The last one probably, and it's very topical, is going to be in my mind geopolitical risk. You throw a stone anywhere in the globe at the moment, there seems to be some geopolitical risk linked to macroeconomic. So that's going to be a big concern, topical, I hope, but that's a big concern at the moment.
Okay, I'm going to move on to the BPO, the bank payment obligation, which is, of course, SWIFT is very bullish on. But according to the survey, almost half of the banks surveyed had no plans in place to invest in the BPO. Does this mean, when will it really be, I'm looking at you, Gerlach, so, when will it no longer be early days for the BPO or the trade services utility for that matter?
Well, it's interesting because in the previous introduction you mentioned the fact that banks are focusing a lot on streamlining their trade operations. I think that's why it's taking a longer time to introduce BPO. First you have to make sure that in your financial institution you have reached all the efficiencies in front office, mid, back office systems in trade before you can actually open the BPO channel for your customers. So if I look at ING, yeah, we clearly have it on the map. Is this something that we'll have next month? No, because we also are looking in making our trade operations more efficient by hubbing more, by implementing new software. By the way, with my manager.
I'm going with you because you're nodding next. Yes. What do you think?
This is actually a very interesting subject, and if we look historically to the BPO, it's taking time, and it's moving very slowly. And the fact that the URDG BPO has just been launched, it's also making it to take a little bit more time to roll out because it needs to be regulated. When we talk about regulators, of course that the BPO needs to also be regulated so that the people can trust it. When we look to the TSU, it has been there for many years, but not many banks are using. We are in testing phasing, like banks like Barclays, ING, that are really using it in testing environments, but they haven't really rolled it out to their corporates. And what we see as Misys when we work with the corporates at the same time, because we follow the trends for the corporate so that you can advise our partners, because for us the clients, the banks, we work with them as a partnership. And in that aspect, we do see that the corporate, when they look for the BPO, they look for a different way of financing a transaction. It's like a light LC. That's exactly what the corporate wants from a BPO, while the bank is looking for a way of streamlining the operation and maximizing the liquidity and guaranteeing the transaction being involved on the whole supply chain. So there is still a mismatching what the expectations are on the two verticals, the corporate and the bank. And that's why we keep on working in order to have a portal where we can bring the corporates into that portal, which not only they are able to see their transactions and request the BPOs, but at the same time they are able to see their whole portfolio that they have with that particular bank. And it's really, once we have all this in place, the BPO will then be there ready to be rolled out fully to our corporates.
I would say that, unfortunately for the trade business, every time we launch a new product as an industry, it takes us a lot of time, to get ourselves first educated with that product, and then later on, our customers. And as you very well said, Carlos, I think that definitely there is a trust piece of it. So I think that it will take time to bring all the players, all the stakeholders, banks and corporates, to get to know the product and to make it workable for them.
Okay. So in moving on maybe a little bit to the types of corporate clients, not all corporates are the same. I'll start with you, Sammy. What about the SME market? What about these services? What sort of unique demands are they looking for?
Well, to start with, the SMEs in every recessive environment sort of get hit first, and sort of their impact is the maximum. And I think it's not been any different in the last 4-5 years. When a lot of banks are looking at deleveraging, I think the first impact was always on the SME sector, because high risk. Basel is also not very, very, supportive, if you will. But in some forms, I think this is the sector which really needs to be supported, because that's where the grassroots of the economy are. That's where a lot of the problems that we're seeing from a macroeconomic recession point of view could be solved. So what might happen is that some banks, we in Citi have a very big commercial banking business, but we've been over the last 12 to 18 months fortunate to have worked with some governments on some very intellectual sort of structures, different from what would have been seen in the past. So for example, in the UK, there was this solution around the pharmacies. The pharmacies in UK were not seeing the money coming from the government on time. And we worked with some of the banks in UK to be able to get the pharmacies in UK under the NHS, National Health Scheme, to get their monies faster. And that's a big program that the UK government has really realized is good. It's something that they want to roll out further. Then in Greece, as we all know, the markets were quite fractured, especially trade markets were very fractured. So working with a couple of banks and the European Investment Bank, we came out with a solution which helps the SMEs import into the country. And the sovereign risk is no longer an issue with regards to those imports. So I'm sure there are a lot of innovative solutions out there. The SMEs are going to get a lot of support from their respective governments, because governments realize that if they have to turbocharge their economies, it's the grassroots level industry that really needs to get the dollars.
You were nodding to that.
As you know, in France, for example, the government is making a strong push on the banks to finance the SMEs, and consequently we cannot escape the trade finance area. So we are designing very simple product, very standardized, in order to get a price as low as possible, and selling that in a large scale to the SMEs. But this is a long process, because we have to educate the SMEs. People are not educated to trade finance on a worldwide basis. And so we have a team everywhere in France in order to educate and to propose new products, simple products, in order to help the SMEs to export a little bit more. And this is under the screen of the government, the Ministry of Finance.
I think it's a very good comment, by the way, which applies to many markets in Europe. The SME segment is a large one, and there's a lot of political push also in our home markets at ING. To support SMEs, but you have to get more efficient, almost in a retail way or consumer way, in distributing your product and opening up your channels to the SME segment. And that's where we're spending a lot of time on. Yeah.
So I'm gonna wrap up this panel with a final question for each of you. So I'll start with Baihas. From the results of this year's survey, was there any trend that surprised you? And maybe if you could add to it, what are some of the things you're seeing in the transaction banking industry right now?
Well, the biggest surprise is to see that the priority for almost all the banks that participated in the survey is to streamline their operations. I think that that it's a common theme, but it was a surprise to see it's not only for 1 or 2, 3 banks. It's everybody. Actually, it's everybody.
Yeah. For us in Misys, not only having the banks aligning, and they've been doing this for quite several years. It's been growing, and you can see it by the survey that the percentage has been growing. The transaction banking space, where the banks have aligned all their operations to be transaction banking, it's been growing. But at the same time, having the corporates still looking for that window to all their operations in the same way as the bank has aligned himself. For me, it's quite surprising. While we are there today and we are able to deliver that. So that's exactly what the corporates today, they want to, as was being mentioned, they want to be able to see their forecasting not only for their country but for global players on the corporate side, to be around the world to see where is my liquidity today. And for that we need to have the solutions which Misys can partnership with our clients in order to deliver that for the corporates to help them to expand.
Yeah. Did anything surprise you?
Yeah, for me the surprise was actually the same, the focus on operational efficiencies. You would think the crisis starting in 2008 that banks have made their moves already, but it's a long process. It was also a comfort feeling, I must say, because you always think that the grass is greener on the other side, knowing that we also still have a way to go to these operational efficiencies, but we're not alone because we're all in it.
I was surprised that compliance was not at the top priority for banks, because it seemed that it is a big concern for every banks around the world, and on trade finance especially, compliance is a drain.
Do you agree?
Oh, absolutely. So I agree with the compliance front. I was also surprised. I think the two refreshing things were, one was efficiency, and the other was move towards technology and digitization. I think that was a clear echo across, and that's pretty much, if you look at the cash and trade market, as per a BCG study, that business is going to be for banks a $500 billion business globally. So it's a very big business. But the fact that everybody is looking at efficiency, everybody is looking at taking trade to the next level as far as digitization and technology is concerned, was very, very refreshing for us.
Excellent. Anyway, thank you, gentlemen. Thank you all very much. I appreciate it.